Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is November 15 and we're starting from euro-dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0734 occurred when the MACD line moved upward from zero, prompting a signal to buy. This, along with the recent US statistics, led to a price increase of over 100 pips. Euro rose because even though the third quarter GDP data for the Eurozone remained unchanged, the report on business sentiment in both Germany and the Eurozone turned out to be slightly better than forecasts. Furthermore, the US released data showing that inflation in the region decreased more than expected, thereby leading to a sharp jump in the euro by more than 100 pips during the US session. Today, market movement may be influenced by figures on consumer price for France and Italy, as well as the industrial production volume and trade balance in the Eurozone. If the numbers surpass expectations, euro will continue to rise. For long positions, buy euro when the quote hits 1.0881 and take profit at the price of 1.0944. Growth will occur in continuation of the bullish trend and after strong statistics for the Eurozone. When buying, make sure that the MACD line lies above zero or rises from it. Euro can also be bought after two consecutive price tests of 1.0850, but the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.0881 and 1.0944. For short positions, sell euro when the quote hits 1.0850 and take profit at the price of 1.0814. Pressure will increase after an unsuccessful attempt to consolidate at the daily high and weak economic data from the Eurozone. When selling, make sure that the MACD line lies under zero, or it's starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0881, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0850 and 1.0814. The next stage of our review is the next major. It's time for GBPUSD, presented by Dean Lell. The British pound strongly rallied against the backdrop of a widespread dollar sell-off. At its peak, the exchange rate strengthened by approximately 1.8%, which is about 230 pips, allowing the pound to reach the level of 1.2500. On the 4-hour chart, the RSI indicator shows a signal of the pound's overbought conditions in the intraday period. The indicator reached a level of 82.48, the highest overbought level since May 2021. On the same chart, the alligator's MAs are headed upwards, which reflects the quote's movement. Considering the pound's excessive overbought condition, we can expect a retracement phase to follow. In this case, the dollar may partially recover its value and move towards the 1.2350 level. However, an alternative scenario suggests extending the upward cycle due to the current momentum where speculators may ignore the technical signal of overbought conditions. This scenario will come into play if the price settles above the 1.2500 level. Complex indicator analysis provides a bullish signal in the short, medium, and long-term timeframes. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsapas. Early in the European session, gold is trading around 1965, above the 21 SMA and above the 200 EMA. Yesterday during the American session, gold made a strong technical rebound after reaching 6-8 Muri zone around 1937 and then rose to 1970. The US inflation data released came below analysts' expectations, which weakened the strength of the US dollar, and gold took advantage of this situation. The inflation data also caused US Treasury yields to fall, which also favored gold. Gold rose from 1937 towards the daily high of 1970, more than 33 USD of its price, which means that it could continue to rise in the next few days to reach the psychological level of 2000 USD. However, since it's showing signs of exhaustion, a technical correction towards the 21 SMA or towards the daily point located around 1956 is likely to occur. In the coming hours, we expect gold to make a technical correction and then resume its upward cycle. On the other hand, gold could find a strong barrier around the weekly resistance located at 1975, or around the key area of 1977. In case this scenario occurs, gold could fall below this area. Only if gold falls to consolidate above 1977, this could be seen as an opportunity to sell, with targets at 1958 and 1953. What about cross-currency pairs? Arif Makmur describes AUDJPY cross-currency instrument. With the AUDJPY price movement being above the 200 EMA and the awesome oscillator indicator being above level 0 on the daily chart, then, based on these facts, AUDJPY in the next few days has the potential to appreciate up to level 98.52. If this level is successfully breaks, as long as there is no downward correction that breaks below the 95.98 level, AUDJPY has the potential to continue strengthening up to the level of 99.32 as its first target and level 101.41 as its second target. And finally, here's Laurie Bailey with USD-JPY pair focused. Let's have a look. The dollar managed to withstand the first wave of the storm that started yesterday, and in its confrontation with the yen, it stayed above the support level of 150.00. If it closes the day below 150.80, It will signify the consolidation below the price channel line, which the pair crossed yesterday. Further consolidation below the MACD line 149.55 will give the price a start for a medium-term decline 140.93. If the price rises above 150.80, and there is a probability of this due to reversal of the Marlin oscillator signal line from the border of the bearish territory, it will be considered for a retest of the resistance at 151.95. A break above this mark will make it possible for the pair to aim for 153.25. On the 4-hour chart, the price has consolidated below the balance and the MACD indicator lines, and the Marlin oscillator is decreasing in the downtrend territory. These circumstances favor a bearish scenario. However, as the price approaches 149.55, bullish resistance will increase. We are awaiting the resolution of the complex situation. That's all for today. See you online soon and good luck.